All right, welcome. Today we're doing a deep dive, specifically for you, the retail investor. We're looking at a specific case study in a sector that has been, well, to put it mildly, completely unloved. We're talking about frac sand, and we're going to walk through a very disciplined process for finding real value where pretty much everyone else just sees risk.
You know, this is the fundamental question for any real value investor, right? When a sector gets absolutely beaten down, the consensus is always negative. But inside that dislocation, that's where the opportunity is hiding. The frac sand industry for years has seen terrible pricing and razor-thin margins. So yeah, everyone hates it. Let's apply a disciplined filter and see if we can separate the actual signal from all that noise.
So our approach here is not about speculation. It's about having a clear, disciplined mission. We are hunting for two things, and two things only. Companies with rock-solid, fortress-like balance sheets, and really clear, identifiable catalysts that can unlock future value. That's our filter. Everything else, it's just noise.
So the first step for any disciplined investor isn't to figure out what to buy, it's to figure out what to discard. We start with the entire field of competitors, and we just systematically apply our criteria. It's a process of elimination that, in the end, leaves us with only the highest conviction idea. First up, a name many of you will probably recognize, US Silica. For years, this was a key public player, but for our purposes today, it's an immediate discard. Why? Well, in July of 2024, it was taken private by Apollo Global Management in a $1.85 billion deal. It's just not a public investment option anymore. Simple as that. Okay, next.
Now here's where the story gets really interesting. Hi-Crush is another big name. They actually fought their way out of a 2020 bankruptcy. But you can't invest in them directly anymore either, and this isn't a discard. Nope, this is a plot twist. Hi-Crush was just acquired by our target company, becoming a fundamental catalyst for our entire investment thesis, so remember that name.
Finally, we have to talk about Liberty Energy. And let me be perfectly clear, this is an excellent company. They are a top-tier operator with a true fortress balance sheet, generating an incredible 21% cash return on capital invested. But for our specific mission, it's a pass. See, Liberty is a diversified well completions company. They do pressure pumping, logistics, the whole shebang. Sand is just one part of their business. We're looking for a direct, asymmetric bet on sand itself, a true pure play. So Liberty gets an honorable mention, for sure, but it's not our primary vehicle. And so, through this process of elimination, this funnel, we arrive at our candidate, Atlas Energy Solutions, ticker AESI. This is the company that perfectly fits our strict criteria for value, for financial strength, and for those clear, game-changing catalysts. First, let's just look at the numbers. Its market cap is roughly $1.48 billion. Now, that size puts it squarely in the small-cap sweet spot. What does that mean? It means it's large enough to be stable, but it's often too small for the massive institutional funds to really build a meaningful position in. This is exactly where mispricings can hide in plain sight. Next up, it's valuation. Atlas trades at a price-to-book ratio of 1.17. Now, what this number tells us is that we are buying the company's tangible hard assets, its mines, its equipment, its entire logistics network, for just a 17% premium over what they're actually worth on paper. In an industry of real things, that is a very, very reasonable price to pay. Now, remember that fortress balance sheet we were looking for? Well, here it is. A debt-to-equity ratio of just 0.47. This is exceptionally healthy. It signifies real financial stability, and it gives the company the flexibility to navigate the industry cycles without being a slave to its lenders. This is a business that is built to last. And this right here, this brilliantly illustrates the reward for our patience. While we wait for the market to wake up and recognize the value here, the company pays us a dividend yielding a massive 6.60%. Think about that. You are being paid, and paid very generously, to wait for the catalyst to play out. So we have the value, and we have the financial strength. But, the best investments, they have multiple, powerful forces driving their future growth. So let's move to the catalysts and see how this all builds into a really compelling story for the future.
First is the cyclical tailwind, and it's driven by simple geology. The best, easiest to drill wells in basins like the Permian, they're largely gone. So to maintain production, operators have to drill much, much longer horizontal wells. We call these laterals. And longer laterals require massively more sand to fracture the rock. So the crucial point here is, this isn't a guess, it's a geological reality that is creating a structural surge in demand for Atlas's core product.
Second, we have the company's specific catalyst. And this is that narrative twist we talked about earlier. In a $450 million deal, Atlas acquired its key competitor, high crush. Now, this wasn't just about getting bigger. This was a strategic move that fundamentally changed the entire competitive landscape of the Permian Basin.
This acquisition gives Atlas one of the most valuable assets in all of business, pricing power. By taking out a primary competitor in a consolidated market, Atlas now has significantly more control over the price of sand. This is how a company moves from just getting by with marginal profits to becoming a dominant, high-margin operation.
I mean, just look at what this deal accomplishes. Atlas is now the largest frac sand producer in the entire United States. It integrates High-Crush's innovative logistics platforms, adds 12 million tons of production capacity, and establishes itself as the undisputed logistics leader in the Permian. They now control the product and the delivery. That, my friends, is how you build a moat around your business.
So, let's bring all this together. This entire analysis, this whole process, it really just boils down to a single, powerful investment philosophy. This is our golden rule, and Atlas Energy Solutions is the perfect embodiment of this principle. It has tangible assets. Its product is operationally essential to the energy industry. The sector is temporarily repudiated by the market. It's backed by a strong dividend, and now it has a dominant niche. This is the formula.
Finding these kinds of opportunities requires discipline, but profiting from them, that requires patience. The analysis is the work, but it's the waiting that truly builds capital over the long term. Thanks for joining this analysis.